Let's turn now to take a look at the broader market. Stocks mixed to start the week. Post-election rally cooling. Could Nvidia's earnings be the next catalyst? That is the big question. Joining us now in studio, we've got Chris Watling, who is the CEO and Chief Market Strategist over at Longview Economics. Good to have you here with us. Founder at Longview as well, we should note. So as you're kind of breaking down what will exactly the markets kind of latch onto this week, of course, it's always been the earnings bellwether that has been Nvidia, but what do we need to hear from Nvidia to really impress or continue to give more of a rally on mindset for the markets here?
Yeah. Great question on Nvidia. I mean, obviously, I'm not a stock analyst, but we spend a lot of time thinking about the Mag 7 and Nvidia and all these kind of stocks. What I find fascinating is that when I was last here in August, I was suggesting the market's moving away from the Mag 7. And actually, if you look at a lot of these stocks, they have moved away from them. And we're kind of down to Mag 1 or 2 now, and Nvidia's the big one. So of course everyone's obsessed with earnings this week, absolutely. But I think you made the right point. The earnings growth momentum is slowing. It's not as fast as it was. And when you look at stocks like this in the stock market, you look at the second derivative. It's the rate of earnings growth, if you see what I mean, that really matters. So I think that'll be the focus. You look around the semiconductor sector, quite a few stocks are really struggling. It's not all, so it's getting harder. The sort of focus is narrowing in on not much left in terms of semis and tech driving this market higher. Personally, I'm more interested in the dollar. I'm more interested in 10-year bond yields. I'm interested in the macro data. I want to hear if China's actually going to do some more fiscal stimulus. These are, to me, this market is rotating into cyclical stuff. Small mid caps, global. Next year is going to be great global growth, as long as we don't get too many tariffs too quickly. So all of that, I think, is really quite encouraging.
Well, let's talk about that global growth. You have fiscal expansion in a lot of countries, Germany, for example. How is that global growth combined with what we're seeing in treasuries going to potentially impact what we're seeing in equities? Could there become a tipping point where you see some pressure in equities? Yeah,
there's a risk of a tipping point. Personally, I don't buy that. I think bonds are really attractive here. They've backed up really hard. Yields backed up really hard. They've sold off on price. And everyone's bearish bonds now. And the narrative always becomes gloomy when things have moved a lot. They were talking about the Minsky moment in bonds and how we're going to pay for all this fiscal stuff. That's always the way. The narrative follows the price. But actually, if you look at the price, people are bearish, it's oversold. And actually, we need lower bond yields to get this economy re-accelerating. There's a lot of parts of the US economy that haven't done much for 2 years. People have kind of forgotten about that. We've all been focused on a bit of fiscal and a bit of Nvidia and so on.
What parts haven't? It feels like it's been all growth. Consumer spending, all-time highs.
Housing is in a depression in terms of activity. There's been no manufacturing employment growth for 2 years. There's lots of bits of people, middle and lower income and so on. So there's lots of pieces of the economy aren't quite firing.
And so is the consumer as resilient then as we're expected to believe, or at least is showing up in some of the economic data, especially when we look at retail sales? And I get it, certain categories have been lagging for sure, but there still seems like there's a tenor for the consumer where, if possible, they're going to spend.
Yeah, look, I mean, I think rate cuts that are coming through and will keep coming through. By the way, almost every time the Fed's cut rates, bond yields have gone down, not up.
Right.
Okay, so, this is all good news. I honestly think the economy will do well next year as long as we keep getting the rate cuts and the whole yield curve comes down. And as you say, there's fiscal stimulus in China, probably a bit in Germany, in the UK, and probably in the US. This is rate cutting everywhere, stimulus everywhere. All of this is good. And I think the consumer, really, if you look at the US consumer, they've been retrenching for 15 years. So they're in good shape.